Let's go. Let's go. How's everyone doing today? It's like the mic's working good. Let's go. Let's go. Hope everyone's having a good week. We're going to get into this GameStop offering. I'm going to definitely be playing GameStop. I'm going to try and get in again tomorrow, maybe even about a little in the aftermarket, but I think I'm going to try and get in some more tomorrow. I think we might have a chance at a little cheaper price tomorrow as well, but we will get into that. How's everyone doing today? A lot of people have been asking or looking at this GameStop offering. A lot of people are blowing up certain things, so I just want to break it down for everybody, make sure everybody understands what's going on here. It's the same thing we kind of seen with Sailor, but it's a little different situation. They're different terms, and the terms were set today on the conversion rate. So you're going to see a different filing come out than this initial filing. They're going to change the terms for sure, because what ended up happening today, a lot of people were wondering what happened with GameStop's price action, why it dropped so hard. But I mean, it was pretty much right in front of our face if you read the filing that it was going to happen. I wish I would have read it more today, because man, I would have definitely been able to play that. So let's go ahead and break down into AMC and GameStop quick. So little AMC news. So part of that CapEx plan, a lot of people are wondering how are we going to pay for this? Well, what they're going to do now is open new 65 ScreenX and 4DX locations. So this is, you guys can see, it's going to be 3 different screens in a 4D type setting. You've seen some of these I know you've seen them on Twitter before and YouTube videos, and they do it a lot with the football games. And I'm hoping, Adam Aaron's been talking for a while about getting football, college. He's talked about getting, we did get some college games in there. So hopefully, watching this in football, this can be a big thing, because he wants to have a lot of this in this year and most of it in by 2026 and finishing it up in 2027. So one of the things this is also going to do, which is supposed to kind of separate the experience from other things, is in the chairs. So everyone's going to have recliner chairs. Again, you're going to have the 3D, 4D effect. Everyone will have recliner chairs. But inside of them, they're also going to have special effects as well. You're going to have synchronized motion-based seats. So the base, some of the seats will shake during, scenes and things. Like if you're watching a football game, like as an example, let's say you're watching a football game, somebody gets crushed. Maybe your seat, jerks with the hit, type situation. That would be kind of cool. That'd be kind of different. There's also different lighting throughout the thing that will react throughout the movie that, you don't have in other things. You're also going to have wind. So they'll have wind machines in there. You're also going to have scent that will be released. So different scents, so you'll be able to smell different things, try and actually, make you feel something you cannot feel it, at home or any other experience. There's other effects that they haven't talked about yet. But this is something different, something that, you're not going to be able to do at home, and this is what will separate that cinema from, the normal viewing experience. So this is something that I think is a huge step in the right direction. Some of the movies that they want to release this in, so this year you are already going to have some of these 4D theaters. Some of the movies that they want to release in is going to be a Minecraft movie, Superman, F1 is going to be in the 4D theater. Now, to me, a NASCAR movie in 4D might be pretty badass. Can you imagine a NASCAR movie? Let's say they look through they're looking through his eyes. You can see everything through his point of view in 4D. That would look super badass. So F1 might be super cool to see that. You got Mission Impossible is going to be in there. The Fantastic Four. They want Thunderbolts to be in there. So you can see some of these theaters, they expect to be out pretty soon. On top of that, you're going to have Ballerina. That's the John Wick adoption of the next movie. What else you got here? 28 Years Later is supposed to be on there. And Jurassic World Rebirth. The new Jurassic Park is going to be in 4D. Seeing Jurassic Park in this 4D experience would be cool as hell. That's something that I definitely want to see. Again, they're going to obviously charge a little bit more per ticket. But could you imagine being, let's say you're watching Jurassic Park and you're seeing them on the screen and they're walking and they're stomping and your screen, your seat's shaking as they stomp. You feel that effect. That would be something these actually sound pretty badass. So this is something that should finally separate, the movie experience from the home experience. And, like I said, these are some great movies this year that they're going to put out. They want to get this out before 2026. When, again, I've told you guys, the box office for 2026 should be ridiculous. So, again, great news for AMC. We should see these out here. Every single one of the 65 should be out in 2027. They have a list. Oh, I should have grabbed the list. They have a list of ones that are actually going to be getting it. Where is it? I think they're right here. No, that's not it. Sorry, I had a list here. I'll post a list in the description under the video so you guys can see, where they're coming. Now let's get into this GameStop offering. I'm in GameStop. I did buy some shares in the aftermarket here. I think GameStop shares are going to drop a little bit tomorrow, and I'm going to try to re-enter again tomorrow. Now, reading this thing, a lot of people were wondering, why did GameStop stock drop so hard? And when you read the filing here, it talks about the conversion rate and how they could set the premium today. And if you've been in any of these other stocks before, GNS, all these, any of these things, all these AMC, all these people, you've dealt with warrants, you're watching all this stuff, premiums, all these bonds, you've seen it all. Now, one of the things that they're able to do, if you guys look over here, so one of the things that happens is called an initial conversion rate. So GameStop will go ahead and they'll release the bond details, and they'll say, hey, we're going to have an initial conversion rate of whatever the price was, and then you guys have a chance the next day, as it says right here. So what it says right here is basically the premium's going to be set the next day, if you guys look down here, from the volume from the VWAP. So basically, it's looking at the price of the common A stock from 1 through 4 o'clock. And that was the next day. So as you guys can see right here, today on the 27th was the pricing day. Okay? So if you come over here and you look at what they were talking about, you guys can see right here, the pricing day was on May 27th. So that means what the hedge funds and all these people and all these guys that want to do the arbitrage play, all these people that want to get into these bondholders, basically GameStop said, here's our initial price. And as you guys can see, GameStop quoted these for every $1,000 you spend. We will give you, you get 33.4970 shares, and we're quoting it at $29.85. Now, what ended up happening is they basically said the next day you guys are going to be able to use the composite of the VWAP from 1 to 4 o'clock. So what did they do? They shorted the hell out of it. They lowered and dropped the stock. They sent all the buys off exchange, sent all the sells to the exchange, the things we have seen forever. Okay? So the new bond people were like, what's going on? What happened is you got attacked like no tomorrow by arbitrage holders, as you guys we're gonna go into here in a second. It's Convertible Arbitrage 101. So people that were gonna do convertible arbitrage instantly attacked it. On top of that, you had shorts attack it. On top of that, you could have had market makers do internalization. They could have got a call from their buddies. Hey, move these off exchange. Do this. This is one we want to go after. We got to lower it for this now. Okay, so why do these guys want to lower it? So they had the moment to basically say, all right, you guys say it's $29.85, but we think it's this. And then it was set to, what was it? I think it was like, it's 37%. So it ended up being a 37% conversion rate. A 37% premium rate is what they ended up dropping it to. It was like 26 or 21.65. So there's like a 37% difference between the current stock price and the premium price that they sent. Okay? So what this ends up meaning, and I'm going to break this down for people because a lot of people are comparing this to Sailor, and it is like it. It's like it with the 0%, but there's a difference. Now, I'm going to be getting into GameStop. Like I said, they might not, what I believe is they're not going to let the price rise tomorrow because they're not going to let options hit. I believe, which we're going to get into in a second here, and you're going to realize it's still like a negotiation phase, okay? So hold on a second. So right now, and then you guys are going to be able to understand everything, and there's money to be made here. There's money to be made here in GameStop. There's definitely money to be made right now on this play. So basically right now you have GameStop. So here's GME. They're issuing a bond. This bond has 0% interest. So in other words, GameStop's not paying you anything. GameStop also has the right to choose if they pay you in cash or if they pay you in stock. Okay? Now on top of that, you're going to have a conversion rate. So right now you have a conversion rate. Okay, I should have just... I don't know why I write this every time. You have a conversion rate of, what was it, 29? I think it was like 35 or whatever was it? 29.85, sorry. So you have a conversion rate right now of 29.85. And so you get 33, what was it, 33.4907. Now 33.4970 is what you get for every $1,000 worth of stock that you spend. So your conversion rate right now is for every $1,000 of the bond you buy, you get 33.4970 shares. Okay, so this is what GameStop said, and they said this is our price. This is what we're offering people right now. You guys have a day right here. So basically, the next day is going to be, like I said, the price offering day. So this is called your initial price offering. So then the next day, they had a chance to respond on the price. And of course, what bondholders always do, as we always learn, is they attack it. Because here's the thing that's stupid. They get all this time. They get all this meaning ahead. They get all this opportunity to attack it before they can even release it. Before anything even happens, they basically get to say, well, we'll do this at this, and you need to do this, and we need to set the premium. Like, they shouldn't even be allowed to do any of that. It should just be, here's our offer, and this is that. Now, Ryan can ignore them. Ryan can just say, I don't really care. This is what we're offering. Deal with it. But we're going to get into why he's going to end up having to do some kind of thing. So right now, what you ended up having is the next day is you have these guys say, nope, this is going to be the premium price. Okay. And right now, they have it at like, I'm sorry, I forgot the price. I should have wrote it down. It was like 20. I can't remember I could have looked right now. It was like 21 or 22. Either way, I just remember it came to 37% difference, okay? So right now, the premium price is 37. Why is this not? Uh-oh, hold on. Hold on. I'm getting that stupid lag again. There you go. All right. So right now, the premium price is 37% lower than the $29.85. So what that tells GameStop is these guys think the set, it's called the set conversion price, should be $22, $22.36 or whatever the heck. I'm sorry, I wrote it down. I had to go do stuff with my kid and I completely lost it like I always. So it was $22.67, whatever it is. So they think that the set conversion price should be $22.67, not $29.85. So they're saying to GameStop, your super buy price, if you want all of us to come jumping on in, we think this is a more fair value. Okay? And now GameStop, they'll get this back, and then they're going to look at it and say, okay, to get more people enticed, to get more people attracted to our bonds, because right now, if they think that, the premium's 37% high, now, why I think GameStop might not raise tomorrow, because you're not going to let all these options kick in right away. These guys still want the price to stay low for a couple days. Okay? These guys still want the price to stay low for a couple days until the bond is released and they buy it, because then they can sit there and say, hey, the premium, the next day, hey, it's still, the price is still below, the price is still around here. But then I believe once this is out, it will go up, because these guys now have a vested interest in the price reaching the set conversion price. So I believe GameStop can definitely drop tomorrow, and then next week have a very, very good week, depending on when this, this bond offering goes through and all that. So again, I want to get shares tomorrow, or maybe an option for, a month out is what I'm going to be looking at buying. I'm going to be looking at near in the money. So I will definitely be playing GameStop here. But again, so now what they're looking at, so you also have arbitrage play. Now, if you guys look over here, the first thing you do in an arbitrage play is, guess what? You go out and you get convertible notes. You're going to be the bondholder, and the very first thing you do is you start shorting the stock. You start shorting the stock, and then you start going ahead and you get buy the bonds after they lower the premium. And then what you do, the reason why you do this is, now let's say you're GameStop, okay? Let's say you're Ryan. You see that, all right, this is the type of thing. You're going, all right, I'm offering a bond to people that is 0% interest. It's 37% premium, so it's 37% currently above the ask price. So he's sitting there going, maybe I need to give them a little more incentive to buy this. Maybe I won't have as much demand right here as I need to fulfill this, because guess what? The current price is way above, and I'm not giving them interest. So what can he do? He can look over and say, all right, and you've all been through these. You've all been here. He can go ahead and say, all right, I will incentivize you guys, and I will give out warrants. I will start to attach warrants in the next offering after the revision. So, or I can say, all right, we still need to do the $29.85, but I will set warrants that will go off. So if it's, what's this, $29.85, he could say, I will set warrants that will automatically go off around the $29.85 mark. Okay, or what he can do is come over and say, all right, what we will do is lower this number over here. We will make it a little more, we'll add a little sweetener. Instead of for every $1,000 spent, we will give you $33.49.70. We will do it for every $950 spent. Sorry, that circle is complete trash. We'll do it for every $950 spent. Or what he will do is say, all right, we will no longer, GameStop, we will give up the right to choose whether you pick cash or stock, and we will allow you to choose. Because this way, if the price of our stock is dropping and you don't want stock, you can go ahead and say, I'd rather have the cash, because cash is always a good backup. It's good everywhere. If you think the value of the stock is going to keep dropping and you would rather have cash, that's more of a backup to some people to be like, all right, I can still get the cash, instead of GameStop saying, no, our stock is dropping. No, these are all potentials. This is just what they're looking at. I'm showing you all points of view here, and I'm going to show you why Ryan did it and the good. There's tons of good, obviously, from this deal, but I'm showing you the risk factor first. So then he can go ahead and he can attach the warrants. So now if you attach warrants at the $29.85, it will take away a lot less risk for these people. And they'll say, all right, we'll do it for the $29.85, and that's all. Ryan's happy. These guys are happy. But in the end of the day, every one of you guys have been in these stocks. You've seen these CEOs attach these warrants, and it always hurts us in the end. They always get to their stock price. They always execute them. And the next thing you notice, they made money. The stock drops again because the float lowers, but then it rises back up because we buy them back. And that's what I was trying to explain to everybody in AMC. You guys are so worried about dilution. Who cares? We were the ones buying the dilution. Who gives a fuck? Does it matter? No, but you could have fixed the fundamentals. Same thing here. Ryan's looking over here right now going, I can get interest-free loans, and he can buy Bitcoin. Okay, so the reason Ryan's buying this, he can go over, and a lot of people, now listen, because I want a lot of people to understand, because he's telling you everything that you want to hear, but then people still come out there and then don't listen, dude. So in the earnings call, he basically said, guys, I'm not going to expand the retail business. He's not worrying about expanding retail, the GameStop, the retail store. He doesn't really care about expanding that right now. That's not his priority. So what he's going to do, it seems like he's trying to become more of a venture capital type thing in the meantime until he can figure out which direction. And that's not a bad thing. Great. So you're going to keep on generating and generating and generating money in the meantime? There's nothing wrong with that. Great. Until you want to pick what you want to do, amazing. So what Ryan's doing is Ryan's borrowing $1.3 billion. He's borrowing. Now I want people to understand it because a lot of people are not understanding. He still needs to pay this back. But he doesn't need to pay it back till 2030. He's got plenty of time. Plenty of time. Now, Ryan's looking over here, and he's going to get in at, what, 87K around? 85, 86K? What Ryan's betting on, because there's not much risk there for him in a sense, because he's betting on, Bitcoin going back to 100,000, 112,000, 115,000, maybe even higher. Before 2030, he has 5 years. That seems like a pretty damn good bet to me. Seems like a pretty damn good wager to me. I'm pretty sure he's going to be correct. Now, let's say, it jumps to 115 as an example. Ryan can now sell, make all of that profit. Now, to me, I don't sit there and think like all these people are going, oh, man, I think he's going to get this whole GameStop forever and do this. And no, he's not Sailor, which we'll get into in a while here. Ryan's doing this to me as like, all right, I'm going to make as much money in the meantime. I believe in the next year or two, Bitcoin can rise thousands and thousands. He believes Bitcoin can break 105, 110,000, maybe even the short term, and he's going to keep taking advantage, and he's going to keep riding waves. Good. That's what he should do. That's what everybody should do. I've been telling people to ride Bitcoin waves left and right, and guess what? You would have made a killing. So Ryan has plenty of time to pay this back. So what Ryan will make off of this loan is the difference right here. He'll pay the $1.3 billion back. And like I said, in my eyes, he's trying to do this for like a 1 to 2 year loan. He's betting in the meantime, Bitcoin explodes in the next 2 years and he can make a good profit. Now, a lot of people saw that thing and they're like, well, he's going to put it into expanding and doing this as well. And then no, he's not going to do that. He basically told you that right away. He's not putting this into expanding. It's going to all go into some type of asset. Now, what's the risk for Ryan? The risk for Ryan is if suddenly Bitcoin drops to like 72,000, 70,000, goes down, it goes down. But the thing is, let's say it even drops to 70,000, 60,000. He's got plenty of time for it to go back up. So the only risk is if suddenly Bitcoin drops and drops and drops, and tons of these bondholders come in and say, all right, I'm going to convert, or I want to convert my thing. I want my cash. I want it now. I want to get out of this. I want my cash. And then they start jumping out. And then Ryan lost all of this money, the difference between the 88K and the 72K. So he lost all the money so he got the money from that, the 1.3 billion. He bought an asset with it. That asset lost value. So he could potentially lose that money if all these guys come running and Bitcoin crashes. Do I believe Bitcoin's going to crash? No, I don't really think so. I mean, there's a chance for anything. I mean, every single time something crashes, you guys see people deleveraging. And guess where they go to? They go to Bitcoin. So right now, Bitcoin's really wishy-washy. If Ryan does get it, I mean, obviously everybody's sitting there going, maybe he already bought now. He didn't buy now because this loan's not even finished. He didn't buy Bitcoin yet. The loan's not even completed. The offering's not done. The bond's nothing's already out there. Like, he didn't buy it. He didn't buy it with his own reserve cash right now. So, like I said, right now, what he's doing, he's paying 0% interest, and he's taking a chance that Bitcoin's going to rise more. Go up more, up more, up more. Now, what does this do also for bondholders? Who will be the bondholders? They're going to be arbitrage players, and the other thing is going to be shorts. Now, I'm going to show you why. Shorts are going to come in. Now, a lot of people, when they saw this offering right here, it says something about it may not be offered or sold in the United States. A lot of people, unless they're applicable or exempt from. Now, people don't understand. That means quibids. Quibids are hedge funds with assets over 100 million, banks, all of that. So those people in the United States, they are exempt from this. This basically just means retail can't get it. Certain banks can't get it. You need to be a person of over 100 million in assets to be able to purchase or be able to jump into this bond. Why did they do that? Because they want to say, hey, I want to put the risk onto people that can afford the risk. I don't want to put this on the shareholders. I don't want to instantly dilute. But what I want to do is put this on the risk for people who can afford the risk. And what I'm going to do is offer them a conversion rate. And if they believe the stock will go over the conversion rate, then they're going to do it. Now, like I said, since you went over here and you have a 37% interest, Ryan's going to have to do a kicker. He's either going to do warrants. So if suddenly he does warrants, don't be surprised. Don't, oh my God, and go fucking nuts. Because he needed to do the warrants to get the bond at what he wanted to set the price at. The reason Ryan would give the warrants to set the price on the conversion rate this high is because now, to make the conversion attractive, his stock needs to go back to $30 for them to even be able to convert to break even. And the way Ryan's looking at it is, all right, if I can get them at this $30, they're on my side until the stock's at least $35, $36, $37. Then maybe there's a chance they can convert. Maybe there's a chance they convert at $7, $8 a share, and then they make their money. You guys all saw that with AMC. These guys are not. Here's the thing: in most situations, they will hold because they want to. They'll hold till maturity because they want to collect interest payments. But that's the difference between this one and other bonds. There is no interest rate payments. So it's not like these guys, the only thing that makes it attractive to them is the conversion rate. Okay? Now, in a sense, this hurts a squeeze. And let me explain why. Because shorts are going to jump into this bond. Now, let's say GameStop jumps up to $50, $60, and I hope it does. That would be fucking awesome. So now let's say GameStop's at $60. Let's say Ryan attaches his warrants at the $29.85. Now they have shares that they get their free shares because that was their incentive on the bond. So now they get their free shares over here on the warrants. Now they also get to convert, because let's understand this. So now they get to convert shares at $29.85. Let's say it jumps up to 50, 60. The reason I'm telling you guys this is it's just be safe, because you guys have seen this multiple times in other stocks. When it's running up, it goes way above the conversion price. It goes up $10, $15 above the conversion price. Then they convert. Again, if you have no interest payments, the only thing that will make this attractive is the conversion rate and then the warrants that you will have to attach. Now, again, when these guys, so let's say it jumps up, let's say it starts to squeeze, let's say the shorts start to get squeezed. What they can do now is do the conversion, and at this point, they basically get 2-to-1. So they'll use one of their shares towards their margin requirement, and then what they can do is use the other share, sell it, use the profit to cover the remaining loss attached to that short position. And that is how you do part of your convertible arbitrage 101. The shorts are going to jump into this as well. So in case they do get squeezed, they can get these extra shares to help what this is called is just control a squeeze. Now, I'm not sitting there saying, guys, it can't squeeze. I believe it definitely can squeeze. GameStop can definitely squeeze. They can convert at any point. But just understand that they'll have these to help control the price. If GameStop jumped to $90, $70, $80, are you guys going to be pissed about it? Fuck no. That's a hell of a trade. It's a sick fucking trade. You're all pretty damn happy. And I'm not saying it can't go above that, but I'm just saying at some point when they reach above this, you're going to have conversions on all of these warrants. On all of these convertible notes. That will be how they can kind of control it for a little bit. And that's just a little bit. That doesn't mean that they're going to get out of these positions. I'm not saying they're going to cover out of this shit. It's going to be how they can help control some of it. It's not like this bond here, oh my God, all the shorts, they can buy everything, they can cover their... I'm not saying any of that. I'm just saying, be smart about it this time. Be smart about it this time as well. If you see it do a big jump, know that all right, these guys are can convert a lot of these notes. The float's going to raise. A lot of these companies are going to make a lot of money. You can do this, the same thing. You can sell, come back in. That's what I want to teach people all the time. You don't have to just ride something to the end. There's plenty of ways to go up and down and make money. And there's a lot of people that get left holding the bags because they wanted to rise and they only wanted to do one thing, and that was just hit the maximum price, and that's the only thing they do. They got to climb the entire mountain. They can't be happy with 75%. And then people that say anything like that and then come back in and make more. That's the thing. You can keep playing it, making more and more, and then get back to the mountaintop with more shares. That's what I was trying to teach people in AMC. Everyone wanted to freak out. Oh my God, you're talking about collecting premiums? You're collecting covered calls and doing this, and you're talking about puts. Oh my God, it's temporary. It's temporary, and guess what? After you collect premiums, you're instantly going to buy, and you're going to get it right back, and you're going to have more shares and more shares. There's more than one way to play these stocks, you guys. But just understand, this is one way that they will try to use control, and this is how you're going to have shorts do this. But again, they could sell their bond crap, and it could go from 60 to suddenly 50, and it could explode to 250. In the stock market, anything's possible. Anything's possible. I'm just saying, if it goes from 60 to the 50, or you see it go from the 60 and start dropping, they're probably converting on the other end. So that's what your drop's going to be. So, like I said, there's ways to play all this stuff. That's all. I know that you're going to have the mob squad out coming after me. Oh, my God, you think this can't... No, I'm not saying... Like I said, I'm just showing you what's happened before in the past with every other fucking stock in the world. It's okay. Stocks go up and then they come down. And you can play them both fucking ways. You can time things. Like I said, just be prepared. Just be aware of this. All I'm doing is giving information for you to play. I'm not telling you what to do ever. I'm giving you knowledge so later on you can make a judgment and do what you think is best. But this is what is happening. This is the risk. Now, this is why today GameStop dropped. Because right here, this line right here. Because from 1 to 4 p.m., see right here, it's 37.5%. This is your premium right here. They attacked GameStop, the new bondholders and the shorts. They attacked the shit out of GameStop so they could set the price of the premium on the bonds so they can entice Ryan to either give them warrants or he can drop the per thousand and he can bring this to 950. Or what Ryan can do is finally give in and he can drop the conversion rate to, say, $27, which is still really good. But what they did is they attacked GameStop to make sure that the VWAP, they made sure the VWAP from 1 to 4 p.m. was as low as they could possibly make it. Now, after hours, you guys see why the stock re-rise again during the after hours. Because what they wanted to do was during after hours, it's harder for them to control buying. It's harder for them to control price. There's less volume. And usually, lately, I've been seeing a lot more retail buying in the after hours. So these guys are losing a little bit more control in the after hours, so that's why you saw a little bit more. I think what you finally saw was a lot of retail figuring out what's happening. Jumped in, and again, I believe GameStop will rise in the next 2 weeks. I believe it's a great play to get in. I believe once the bonds are issued, it will definitely recover 100% back to the $29, $30 range. I'm explaining to you what happened today and why it dropped $6. Their entire goal today, the only goal today for everybody in GameStop that was shorting it and for the bondholders was to get this premium as low as they can, to make this arbitrage play as successful as they can, and to protect themselves. And if there is a squeeze, they can get the extra arbitrage, they can get the extra shares so they can sell one or put one share towards margin, sell one share and recover losses. So in a sense, does this help shorts? Does this help these other people? Yes, it does in a sense. It's all about when they convert and how they convert. To say how bad or how much it helped any of these people out. But does it help GameStop out? Immensely. Again, you have interest-free loans for 5 years, and if he buys Bitcoin and Bitcoin flies up, you just got an interest-free loan and you just made a killing. So again, this is both sides. That's Ryan's point of view. I get an interest-free loan. I don't have to. This is where I give Ryan amazing credit. Here's where I give Ryan amazing credit compared to Adam Aaron. Adam, stop fucking diluting the stock every goddamn time. There's other fucking ways. Here's a genius idea here, Adam. Make a bond, sell it to retail only. Put it at 3% interest. Watch how many people buy it. Guess what? All those people that buy it are making more off your bond, Adam, than they would be making in a bank. So it makes sense for retail to buy that. It makes sense for retail to buy that loan. Now, if you pay it at a super, super small interest, let's say you pay it at 3%, 2%, let's say you raise $900 million, $1 billion. Now you go over and say, here's my 10% loan. Let me pay $1 billion off. Adam, it's that simple. It's that fucking simple. Stop fucking diluting the common stock. Do a fucking bond. I've said this for forever. Adam, just do a bond to retail. Make it so institutions cannot fucking buy. Ban Quibids from buying. Any institution over 100 million in assets can't buy. Go fuck them. They can fuck themselves. Just do retail investors and watch. And if suddenly that 8% difference on your loan is the difference between you being profitable and not. And all you need to do is just sell a bond to retail. Adam, insanely and smart idea. Instead of diluting the common stock more, you're not necessarily instantly diluting the common stock. The one thing right now that this will change, and this is huge, you guys need to pay attention to this. You guys need to pay attention right now. Right now, Ryan has this 100% in GameStop's favor. They came back 37% premium. What I want you guys to watch on the next revised, when the official thing is released, if you're in GameStop, this is the 3 things you need to pay attention to. Number 1, did Ryan add warrants? Okay, if he did, that means future dilution. When it hits a set price, that means the second it hits whatever the warrant price is, dilution. The next thing you need to look at is, does he give in on this? If Ryan doesn't give in on this is huge. This is the biggest thing. If Ryan doesn't give in on this point, I will give him 1,000% credit. And again, doing this is already 1,000% better. This is what I wanted Adam Aaron to do a long time ago, but in a different sense. So again, this move by Ryan was very, very good. Very good. But again, there is still possible by dilution, but you're not diluting now. He's not diluting the stock. He's not hurting retail investors. And that's the difference. And that is where I don't care how you feel about anything else the guy's done. That is a move where it's like, all right, really good play. Now again, if Ryan gives up the right here to choose whether GameStop is the one that chooses cash or common stock, that's a big deal. That could also possibly mean future dilution of common stock. I'm just showing you different ways of dilution that could potentially happen. We're just learning. You always want to have this information. Okay. And then the other thing you want to pay attention to is, does he either give in on the set conversion price? And if he does, and he gives in whether these guys can go ahead and do this? Does he lower the set conversion price? Because let's say he lowers the set conversion price to $27 instead.
That means after $27, these guys are in the profits. Again, there's no interest, you guys. You got to understand, they're not going to hold this till maturity. Every single one of these guys are in this to convert. Now, that doesn't mean they're going to convert instantly for a common stock, because again, they can get the cash, and GameStop currently can choose. So GameStop will just pay people out. But the thing is, and this is going to be how they do it, because people are going to ask, well, how is Ryan going to decide whether he needs to pay somebody cash, or how does Ryan decide to give them common stock? It's going to be dependent on the time of the conversion of these guys and Bitcoin's price. Let's say Ryan buys at 85K. And let's say GameStop, no, let's say all of a sudden, you know, it's rocking 94,000 for an example. So let's say he's made 9K a Bitcoin, okay? Let's say the stock jumps up to $33, $34. Let's say it jumps up to like $34. Again, guys, I am 100% pro GameStop. I'm going to keep adding to my position. If you think I am not pro GameStop right now, you're completely misunderstanding this entire video. I'm teaching you everything that can happen. That's it. And I'm completely applauding. Again, Ryan, this move was amazing. Thank you to a CEO who didn't fucking dilute the goddamn common stock to accomplish your goal. Now, again, I will say this is a huge difference between why Ryan's able to do this and Adam Aaron. The difference between Adam Aaron and Ryan needing to do this, which is why I tell Adam to do a retail one at 2%, 3%. Ryan does not have debt. Ryan's going to take this $1.3 billion. I want you to understand the difference, because this is a huge thing if you're an AMC. Ryan would take this $1.3 billion and Ryan would buy the asset, and he's good with making the profits. Adam Aaron, if he raises the $1.3 billion, he needs that for debt. He needs that for reserve payments, you know, to build the reserve up. He's not going to go buy assets that's going to become an additional revenue source. Ryan, since he doesn't have the debt, is able to make this an additional revenue source. So that is a huge difference you guys need to understand as well between AA and Ryan at that point, and why Ryan's able to do this and Adam Aaron's not. And that's why I tell Adam Aaron, stop fucking diluting it. Do a bond, sell it to retail, 2%, take whatever money you do, go pay off a fucking loan that loan is like, some of these are like 12, 13 fucking percent. Imagine if Adam Aaron took a $1 billion loan and dropped it from 12 to 2%. Again, you're suddenly profitable. And retail has told you, we'll help pay the debt. And he could have did that forever. And that's one thing I've said forever. Adam, just do a fucking bond. Do a goddamn bond. There's plenty of ways. There's more ways to raise capital than selling fucking common stock. And one of the ways, the most number one ways, is to sell a bond. You had retail's backing. You could have sold a bond and again, cut your payments in half. Cut your payments by like 80 fucking percent, dude. If you're listening, AA, fucking put a goddamn bond out that is a low percent and sell it to retail and see what you can raise. Just see how much demand's there. See how much, and say 100% of this bond is going to go to lowering our fucking biggest bond payments and getting this down a little bit and getting to profitability. That is what you need to do, AA. You can upgrade this shit as much as you want, but we need to get profitability, and the fastest way to do that is a bond issuance, and I wish you would have done that when we had the massive backing. But again, Ryan, this is a great way. So again, Ryan has the ability, because he has no debt, to sit on this loan and just make the difference on the profit. Ryan has the ability, because he has no debt, and he has so much in the reserves, that if Bitcoin does drop, let's say to 72K, and it which, like I said, you guys, you got to understand this isn't very possible. Well, I guess it is. Anything in the world's possible. But let's say 72K drops to like 70,000 and it never goes above 88,000 or whatever his buy price is by 2030. Or again, these guys have the ability to start to convert, and they convert and start picking cash. Now, again, Ryan, if he has enough profits from his Bitcoin, he's going to choose to pay them out in cash. If Bitcoin at the time they want to convert, is below his buying price, he's going to give them common stock because he's down. He didn't make profit off the loan yet, so he's not going to pay them cash. He's going to pay them common stock at that point. So that is when Ryan's going to choose the difference between cash and common stock on what he should give them. So again, just watch around these areas. And again, people, it's not like I'm saying, my God, let's say it goes to 34 and all of a sudden, a whole bunch of these bondholders convert and it drops for 2 fucking weeks, 3 weeks, and a whole bunch of shares are added. It's not a big fucking deal. It's not the end of the world. We're going to buy them for the 100th time. It will rise back again. I'm just letting you know. When it gets above this conversion price, these guys do not make interest payments. They don't make money by just letting you have this fucking money of theirs. They make money the second they go, all right, the price is higher than my conversion set price, and I've made enough money. Now I'm going to take my money from them. I need you guys to understand that. They don't give a fuck about holding till maturity. That's it. That's all I'm trying to explain to you. Go in with that mindset. If it's $35, $36, say, hey, I might have a temporary drop. It could be these douchebags selling this, and play it. Play a fucking drop. You know what I mean? Play this. That's all I'm saying. One of the things too many people do is like I said, they fall in love with everything, and everything's got to be the rocket, every up and down. Play them. I've played them, started playing those a lot differently this year. Like I said, I've posted plays. We have hit a lot of plays. We've missed on some, and we've hit on way more than we haven't. It's because you can't just fall in love with it, and you got to realize it's not always just going to go up, 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 and ride a wave. And if you make $120, $130 on a contract, and you did it in a day, dude, take it. Get in the next play. Now you have 2 contracts. Now you make $240, and by the end of the week you made $1,000. How many of you couldn't make an extra $1,000 a week? There's, like I said, the worst thing traders have, the biggest problem every trader has, and I see it in my Discord all the time. It's when you're green, is trying to time this peak and worrying about everybody else. When you're green, and you're green 80, 90% in a day, dude, 2 days, dude, that's a good trade to take. You can build it up to next time when you're in that trade, you have 10 contracts. And in that one trade, you made 1,200 instead. You gotta build it up, and you'll do that slowly. And by learning to do that and taking your profits when you make $80, $100 on a contract in a day or two. In my Discord, all we do is weekly trading. I get contracts 2 weeks out every single time. And I look at trades, I look at the weekly chart, daily chart, and then the monthly chart. You can kind of get an idea on what's going on. Look at the indicators, look at everything, and you get an idea. And again, I only will play these things weekly. And ever since I've done that, like I said, I've been a lot more successful than ever. So again, guys, play all these things. Again, I am very pro GameStop right now. I believe that GameStop, though, there's definitely a buying opportunity right now. I believe, again, they're not going to want to have options hit this week. But next week, I think that they will let options hit because the bonds will be dropped and the set conversion price will be there. So I'm pro 100% GameStop. 100% GameStop, especially if you're trying to swing trade 2-3 weeks out. I believe that will also definitely be a successful trade. Get a trade that is currently close to in the money. What I like to do in my Discord a lot is we'll get a contract a couple weeks out, 50 cents out of the money. You get really good theta. You get really good delta. And like I said, you guys do whatever you want to do. But again, I'm very pro GameStop in these next 3 weeks. Definitely believe, again, I want to see what Ryan does with this conversion price. But again, even if it goes to like $29, $30, they didn't buy it to convert $2 extra a share. So again, I don't believe you're not going to see conversions until about $33, $34 is where you'll start to see these guys consider converting. Especially if Ryan lowers it to 27. Because if they can make $7 a share, some of these guys, that's pretty damn good, making $7 a share, dude. Especially when you're buying 20, 30,000. You know, some of these guys are, especially with the way these guys are with liquidity, things like that. Some of these guys are going to have millions of shares worth. Like I said, it all depends. But again, just watch all this stuff. But if that, hopefully you guys understand everything here with this GameStop offering. Again, it was a great idea. It was a great idea. But I do want to say one more thing about this too, because I do want people to understand there's a lot more risk for Ryan than there was for Saylor. When he got in, his average was like 40,000 last year. It's up to like 60K. So there's a big difference between when he got in and now when Ryan's getting in at 88. So I just want people to understand that. Don't just look over it and be like, well, everything's going to be related to MicroStrategy. MicroStrategy got in and they killed it because, again, they're 20,000, 26,000, 28,000 still below. They still have, their average is still 28,000 per Bitcoin below. Even though this motherfucker buys at the top all the time. He's still 28,000 below average. So he's still killing it. Ryan right now won't be making such a massive profit right off the bat. So again, it's all about situations too, guys. So, my little guy's angry here. I might have to go grab him quick. So I do want to show you guys a couple more things here, but I just did want to go ahead and talk about that GameStop thing there. So these guys have been, you guys saw last year that the government kept on talking about how they need more, regulation over in the treasury market and how these short hedge funds, market makers, you saw Citadel's name continuously be brought up, Susquehanna or whatever. They're all being brought up over and over on how they were getting too messed up in these treasury arbitrage trades. Well, now there's another massive crisis going on, and now they're going to need the Federal Reserve. And the Federal Reserve, people are talking about, they're urging them to consider a bailout for more of these hedge funds, because as you guys can see, every way we turn, hedge funds are insanely over-leveraged. Now, this is a crisis. You're talking about a $29 trillion treasury market that they're messing around in. And if they have this explode... Do you want me to go grab him, baby? Okay. But if you guys look over at this, I want you guys to understand this. Look at this number, because this is a big deal. And I want people to understand how big of a deal this is. Oh, he's crabby. Oh, that's funny. So if you guys look over at this crisis all going on over here, it says you can have an unwinding swath of an estimated $1 trillion in hedge fund arbitrage bet. That would not only hamper the treasury market, but others as well. These guys are over leveraged and could potentially have a $1 trillion worth of unwinding and arbitrage bet. How many hedge funds would close down right now? They're worried about these guys right now. They're worried about these guys in the treasury market closing down at a total of $1 trillion. $1 trillion. Why did my TV turn on? You pretty much have a $1 trillion. You have a $1 trillion potential margin call over here in the treasury market, and this is why these guys last year, you had the government kept on talking. This might be a matter of national security. And they need to look into this. Well, now it's blown up to the sum of a $1 trillion potential unwinding of hedge funds, which would take out, oh my God, an unbelievable amount. And now all of these people and all these people in finance are coming in and they're begging the Federal Reserve to consider setting up an emergency program so we don't have an insane stock market crash, an economy crash, everything. This thing would, and on top of that, this would crash your treasuries. And the government can't have that, and that's why it would be a national security. Now all of a sudden your treasury rates are fucking ridiculous. You had all these idiots shorting it. I mean, we literally let financial terrorists destroy every aspect of our economy. They're even destroying the debt. How do you fucking do that? It's unbelievable. But yeah, so you have another... Now watch this, because the numbers keep adding up, you guys. I want you guys to watch these numbers. So you're at 1 trillion over here, okay? We're now at 1 trillion in treasuries. You now have this as well. So the reason the feds do not want to do this, the reason the feds are fighting back, the feds have been absorbing losses for banks, hedge funds for the last 3 years, and they're getting fucking smoked. If you guys look at this chart here, in the last 2 years, not even, the last year and a half, in the last year and a half, the Federal Reserve has lost an operating loss of $224 billion. They have lost in the last almost 2 years an operating loss of $224 billion. The Federal Reserve in the last year and a half has lost $224 billion. Can you imagine if there was a company out there that lost $224 billion in a year and a half from operating, just their operating losses? This is because they keep absorbing all of these bad fucking assets, these bad loans, these bad mortgage-backed security debt that I've shown you guys over and fucking over again. So now you have the Federal Reserve. And again, they're set to have even more. Now, on top of that, if you guys look over here, you remember I showed you guys last week? We were at 220. You're now at 200. So right now, the Federal Reserve is not only has a $224 billion operating loss, they also are writing IOUs to the Treasury. They owe the Treasury $225.391 billion. They owe the Treasury $226 billion. And they're currently at an operating loss of $224 billion. So the Federal Reserve is already getting destroyed. And they're looking over like, bro, we're going to be like... And at the rate that they're going, I showed you guys, they haven't even updated the numbers yet. No, they did yesterday. Never mind. So they did update it yet. Sorry, I forgot the day it is, man. I lose track when you have a kid, man. It's crazy. That's right. It's Thursday. So they updated it. So it's at 225. So that's another 7 billion. So that means a week they're still losing $30 billion. Oh, I mean a month. A month there, because that's 7.6 billion. So they're still losing $30 billion a month. That means they're losing $120 billion a quarter that they still owe the Treasury. So even if the Federal Reserve gets back to a profitability, which they're not set to be profitable for another, the way their unrealized losses are and their assets and their expiring assets, if you looked at their balance sheet, they're going to have a bigger problem. They're going to have more losses again. This is just going to... So by the time they finally get profitable, they're going to have like $400 billion in debt to the Treasury. How long is it going to take to pay that back? The Federal Reserve's not going to be like solvent and like be able to like put money in reserves and things like that for like 5 more years. That is why everybody's saying, what do we have the reserve for? They're doing nothing but destroy money. They're doing nothing but bail out criminals. They're doing nothing but bail out the people destroying the monetary system. Can't figure out what's going on. And they're in charge of it. So instead of regulating it, they're letting the criminals destroy it because they profit off it every single time they do the repos. And it's one of the only ways the feds are able to kind of make money right now because they have nothing but trash assets. So they keep letting the criminals get away with whatever to kind of make any amount of money to kind of lower these. They want to try and lower these losses as much as possible. But there's still going to be losses for the next couple quarters for sure. And that is why, if you guys look, the U.S. Treasury, so when Trump came out, the first thing he did, he started, attacking all of these things, cutting back waste, cutting back spending, told people about the tariffs. People had faith in the tariffs. You saw the 10-year. Look, you saw the 10-year go from 4.53, and it dropped all the way to 4.2, which I know most people are like, what's the big deal? That's like the difference between paying a 7.1% mortgage and paying a 6.7% mortgage. When you're talking 30 years, 0.4% on a $380,000 loan is a lot of money. So then what you see, if you guys watch the 10-year here, it's wishy-washy left and right, wishy-washy left and right on if the tariffs are going to be effective. If the dollar, if the debt's going to get under control. Elon's out there talking about, oh, they're cutting this, cutting that, and people find out half the programs are already paid. He didn't cut anything. He just ended programs that were already paid for because the contracts were already paid out in years in advance. It was the dumbest thing I've ever seen. So while he's taking credit for that, people are finally looking at it and going, all right, the tariffs aren't working. He's not cutting back enough. And if you watch, nothing's getting better over there. The situation's getting fucking worse. Now, if you look over here, what's happening? Everybody's losing faith again. And we're jumping up. We're flying up. The 10-year is flying up. What else is flying back up? Mortgages. Mortgage rates are back up to 6.986. What else is happening? And what did I tell you guys? Get into gold. Gold, gold, gold. It is the way. Gold will see 40. Gold will see 3,500. Again, I had a couple people say thank you today when I got them in at 17. One dude went in when he went to a Nevada trip, won some cash. Showed me today, he was like, yeah, and I got in at 1950, and look where he is. He's feeling great. I've been preaching gold forever. Because why? All of the monetary systems, all the fiat currencies are getting fucking worse. Just worse and worse and worse. The $100 trillion they're already in debt is growing and growing and growing, and guess what's going to happen? The price of gold's going to just keep going, and look where we're at right now. $3,074.80. I told you guys by August I expect about $3,350, $3,400. And the rate it's going, that's exactly where we're going to be. So, again, this silver. Oh, silver looks great. I feel good on silver. They're going to have to keep buying silver. That's the problem. These banks have to keep buying these things. When I tell you guys to get this, it's physical. Physical gold coins. Physical gold. 100% physical gold. That is what you go get, and this is what you watch. You're going to just keep watching it go. You're going to keep watching it go. This is your safe haven. This is when you feel, like I said, this will continuously be a hedge for everything, because eventually a fiat currency is going to go down, and they're going to need to remake a new fiat currency, and the only way people will trust it, because that government already failed. The only way they're going to trust it is it's going to have to be backed by something. Gold. Again, this is going to keep going and going and going and going. We've been talking about gold for 5 years. We've been talking about gold for 5 years. Like, my first couple videos were about gold, and that was in 2021. We've been talking about gold since 1700. So since we've been talking about gold, look at this. Look where you are. We've been talking about it, and if you've been waiting, you're here now. You went from here to here. You've almost doubled up. You're feeling really fucking good. Like I said, guys, and then you go and look over here. The Wall Street, look at this. The Wall Street Journal's latest showed that the short position in silver rose by a hefty 30.85%. From 49.15 million shares short up to 64.3 million shares short, which is a new record high short position. because these guys know they got to keep shorting because all of us are buying it and it's just going to keep going up. And if they can't control it and it skyrockets, they all have short positions that are out of this world, dude. They're unbelievable. They'll get squeezed so hard it's ridiculous. And they're only digging it deeper and they can't stop it. That's why people in Highcroft. Adam Aaron said Highcroft in 7 years will be, that's when he's looking at that investment having a nice chunk of return. And that means in about a year and a half. In a year and a half, I could definitely see Highcroft being a very expensive stock, especially if gold and silver do what I think they're going to do. Now, if you guys look down here, the short position in gold also rose from 14.48 million shares up to 15.88 million shares. A 9.69% increase. So why these prices are just going up, these guys they have no choice but to keep shorting. So again, gold is, oh my God, gold, like you get the gold and you start feeling good. It's like you rub it on your skin, it's your safe haven. This is your safe haven. Like I said, if you started buying gold when we first talked about it, look what you're up right now. You are up $1,420, 85.85%. Pretty good return when you're talking $1,400. Now, if you guys look over here, we've been talking about this as well. So, we talked about the $1 trillion over here that could be a potential margin call. And now the Fed, nobody knows what to do. They're talking about this being a huge bomb. Huge bomb. And they're talking about them needing to buy out bonds to save and save the hedge funds out of their $1 trillion potential margin. $1 trillion, you guys. $1 trillion worth of margin. Again, just give them time. Eventually, they'll shoot themselves in the foot. Now, those same motherfuckers, if you come down here and look, talks about distressed commercial real estate, as I've been talking about for a while. Distressed commercial real estates are squeezing regional banks again. Rising CRE delinquencies, a wave of loan maturities are all coming up. And the second I told you this next wave hits, these guys are fucked. Now, if you go down and look here, it talks about the next wave. According to mortgage brokers, $957 billion in commercial real estate is set to mature by the end of 2025. Another $1 trillion is coming in, and nobody has it. So you got $1 trillion over here, $1 trillion over there. These are the sums these guys are getting this to, because you guys caught them. You're all catching them. These guys are stuck in spots. I know you guys don't see it on the price all the time, but trust me, while you're sitting there living your life every day, these guys are coming in going, how the fuck am I going to make this, manipulate this, to pay this, to make this guy happy, to make this guy happy? Eventually, their musical chairs will run out. They got another $1 trillion coming over here. Now listen, that doesn't count the $157 billion that is already estimated. I'm going to say that again. $157 billion is already estimated in extend and pretend worth of loans. They've already pushed back $157 billion worth and told people, don't worry about it. We'll just pretend you paid us and we'll add it to your loan, and then we're going to raise your interest, even though you already can't pay it. So now you have all of that added onto this. So you have $1.1 trillion maturing by the end of this year. Now, on top of that, if you come down and look, commercial real estates now that went into special servicing jumped from 7.4% in February all the way to 10.32% in February of this year. Now, the problem with most of these banks that have these loans, now, if you guys remember SVB Bank, the problem is you had so many depositors that are rich as fuck, and they had too much money in, and they didn't think that their bank was secure. Well, if you guys look down here, the problem with all these guys now is most of these regional banks, it says now 40% of all commercial deposits are uninsured. 40% total of these guys' loans are uninsured. They're depositors, I mean. Which means that if they have any feeling that their banks could go down, they're going to run. And you're going to have bank runs. So now you have even more risk of bank runs over here. It just takes one person to do what they did last time. You saw that JP Morgan made a phone call. And Morgan Stanley made a phone call, and that's what actually took down Silicon Valley Bank, is they did fraud, and they called them and said that people might be pulling their money out, and then the big guys pulled their money out. Committed some fraud. It was easy to take them down, as simple as a phone call. Now, if you guys look down here, since all of these banks aren't able to loan like we were showing you guys, look what happened. They're now all going to private lending. And I showed you guys that earlier last year, that all of these guys had to run to private credit because nobody in the banking industry is giving these guys loans anymore because they know they're all going to go down. Now, if you look down here, private credit, $1.8 trillion has been raised by private credit firms. While some see these lenders as a solution, others warn that shadow banking risks are growing, talking about how it contributed to the 2008 crisis before. And now you're adding and adding and adding to what people cannot regulate. You're making a bigger problem. Now, when you're going to, the problem and the only way you're going to see the housing market start to go down in America is you're going to see these buildings collapse. You saw a skyscraper last couple months ago there. It went from $116 million when it first sold down to $6 million. Now, eventually, you're going to see these $6 million, $10 million, $15 million skyscrapers left and right. And people are going to look over and go, if I can buy a skyscraper for $15 million, or for $1 million, why am I paying $400,000? $3-4 million. Why am I paying $100, $400, $500, $1 million for this small house when I can buy an entire fucking skyscraper? And eventually, they're going to have to lower prices on houses because you can buy a fucking skyscraper for almost a house price. Eventually, it's not going to make sense. But the problem with that is you have so many of these firms that bought up all the houses. Now, if you guys look over here, we're getting back to the 2008 crisis. New homes, new one-family houses for sale in the United States. If you look here at the 2007, 2008, right around there, if you guys look up there, we're already at that number. We're starting to reach those levels before the crash. You're starting to have more houses for sale on the market than you've ever had in the history of the United States, and no one's buying them. Prices aren't even dropping, and supply is flying up. Supply is flying up, and prices are going up. Interest rates are rising. So again, you're going to see a lot of these banks, as you see, start to have problems on real estate. They're going to have problems on commercial real estate. And I showed you before, they're also going to have problems on their auto delinquencies, which have risen very, very sharply as well. Now, if you look over here, pending sales in the United States are at an all-time low. Nobody's buying. You have basically the biggest supply you've ever had, and you have nobody buying. That is where the housing market is. It is as stagnant as it can possibly. It's more stagnant now than it's ever been in the entire history of the United States. So if you are sitting there and you can't afford a house, don't feel bad. No one can. Look, no one can. So it ain't your fault, dude. Trust me, it's not your fault. It's not your fault. It's $385,000 in a fucking 7.5% loan, 7.1% if you have good credit. If you have shitty credit, you're looking more towards 7.5, 8. Who can? On top of that, see, this is what's going to start to affect BlackRock, and it's going to affect Vanguard as well. What's happening now? What the hell is this? Jesus. Sorry, okay, I don't want to sign up for your trash, dude. What's happening now is everybody's starting to tap into their 401ks. They're going into their retirement, which is affecting Vanguard, which is affecting BlackRock. Because guess what? They use your guys' retirements to buy their shares. So when you guys pull out of your retirement accounts, that means BlackRock needs to sell shares, which means they lose a little bit more voting control on companies. So they don't like it when you guys start pulling out of your retirement accounts. Now, if you guys look at this, we hit an all-time record of 5%. You had 23 in 2023, you were at 3.6%. You're now at 5% in 2024, and it's set to rise even higher. 5% of Americans should not need to be tapping into their retirement to survive, to make payments. That is insane. That is an insane amount of people needing to pull from their retirement accounts for hardship withdrawals. But again, every time this happens, the poorer they make middle class, the poorer they make this. That means BlackRock will need to sell assets, and again, BlackRock will start to lose control in a lot of these companies. And the last thing I just wanted to show people, because this has been going around, and Elon, he's kind of lying about a lot of shit. So you guys remember when Elon posted those charts, and he's like, oh my God, all of these people are they're 300 years old in the Social Security bank, not set to dead. And it's like, and then he wanted to make it seem like they were getting paid, but he never said they were. That's the thing. It's the same shit here. So now he's posting about how they deactivated all of these people that were 150 years old. Doesn't show, or doesn't, again, the thing he always leaves out when you guys see this is he never says they're receiving payments. And then the MAGA people go fucking crazy over it and go, yeah, see, we knew they were stealing. No, they weren't. I want you guys to understand, this is from their own website. This is from their own website, and this is from their own coding. This is from their own system, and this is how they coded the system. They coded the system for Social Security. The second anybody turns 115 years old, it automatically deactivates him. It automatically selects and terminates entitlement to benefits. It automatically terminates him at 115. Nobody at 116. Nobody at 150. None of those people he posted were receiving benefits. Their code automatically shuts them off. There's nothing in here. It automatic. So basically, I'm going to show you the code. The code would basically just say, it would say this: select, and there would be a column, and it'd say select birth. And then it'd say if greater than, and it would have a date that would make anybody 115 years. It'd have a date from 115 years old. And then the next line would say, then set active equals 0. It's that simple of a line. It's a SQL line that I just wrote the whole code in a second. That's literally word for word what they would write to set this off. It would just automatically turn them off. What they needed to do, and it's this simple, and this shows you how lazy the government is. They needed to just do this. And maybe they wanted the records in there for some reason. I don't know. But all they needed to do was case when select birthday equals greater than date of 115 years from this day, or what would anything that would make them 115 years old, and then you would do a select date. You would say then set active 0, or just do / then set delete equals 1, and it would just delete the record instead of even setting it to 0. Or an inactive, you could just delete the record and say delete equals 1, and it would remove it, and you would say then do procedure, and there would be a deletion procedure, and you would say then procedure equals 1, and then you would do set procedure blah blah blah, and whatever the deletion procedure is. It's that simple. It's literally an extra 14 seconds of coding, And instead of writing that, like I said, there's nothing these guys could do. Instead of writing that, the government's so lazy that they make people go in and fucking delete these idiots that have already been deactivated. They just leave them in the database. And then Elon comes in and goes, my God, we deleted some of these records. And everyone, oh my God, we just saved billions, I bet. He didn't even tell you he saved a penny. You notice how he didn't say he saved a penny? Because he didn't. He just deleted old fucking accounts. Who cares? He wasted money when all he needed to do was fucking push a thing that said if active, just, he could have sorted the column by active 0 and then deleted all records. He could have did select all when active equals 0. And then every record would have came up and he could have did enable, boom, procedure, and did the deletion procedure. Like I said, everything he needed to do would have took a programmer 14 seconds. It's nothing crazy. It's nothing crazy. And people sit there and think, oh my God, he's going crazy. He's saving us billions. He's not. He just cleaned up a database. All right. Does anyone have any questions, by the way? I'm all done now. Does anyone have any questions? Kenny Booth, you seem to have all the answers. I do a lot of research, Kenny. I do a lot of research. While a lot of people sit down and hang out, I am sitting here reading a lot of shit. Holding my little guy. All right, what about the people who are 115? I know there's not a lot, but they do exist. People that are 115, they get cut off from Social Security. It says at the age of 115 or older. It says unless that person makes a phone call, they can get approved, and it goes through an entire process. They need to contact beneficiaries. They need to do all of this technicality stuff. There was one moment where somebody did it. Where was it? There was like a example. But that's the thing. It's like you need to go through a giant process with the Social Security Administration to say that you're 115 years old. And then after that, you basically get it for the year. And then every year you have to go ahead and show them. You have to come in. You have to sign the thing. So for somebody to commit fraud, they would need to be coming in, having a person with their fucking card every year, going in there into the office. That means the teller every year is corrupt because the teller is like, yeah, that's fine. Go ahead and sign this. Even though they can clearly see it's not the person. I mean, the only way, like I said, they would have to continuously do this process. Why doesn't AMC correlate with GameStop these days? Well, the difference is, like I said, fundamentals still matter. With people don't want to sit there and act like fundamentals matter. People are seeing Q1 right now is not very good for the box office. They know AMC is going to have a loss. If you guys saw, even though GameStop's core operating business is still losing money, they have enough money that they're off their interest, off other things, where GameStop's still profitable. So that's a huge difference as well. So I mean, they correlate in the basket. Of course, they correlate a little bit in the basket. When you have some runs, you're going to have, some runs here, they'll follow, but they're not going to correlate every single time because fundamentals are still going to separate the two. And that's why I've been preaching forever. See, that's the thing I got told with AMC, man. The way we could have killed them and won and destroyed everything and got what everybody fucking wanted. Like I said, dude, direct route your shares. They were sending your shares off exchange so they could stop the price action. Okay, so go around their ability to send to the off exchange. It was common sense, and that's what I was telling people. Just direct route your shares, and then they will count. Send it to the New York Stock Exchange, because the New York Stock Exchange is the only way you affect their MBBO. The IEX, it has to be a lit exchange, or the MBBO doesn't move. So let's go ahead, take the money out of Ken Griffin's hands and direct route your shares to a lit exchange. And people didn't want to do it. No one cared. I'm like, okay, so if you don't want to follow direct routing, all right, guys, let's stop doing options like crazy and getting these out of the money options and just giving them premiums like crazy. Did anybody stop? No, guys did it for 3 fucking years. People were just going option crazy. It was insane. Guess what? They were collecting premium and using it against you, your own money against you. Told you guys we need to fix fundamentals. We need to kill the short thesis. If we fix fundamentals, the short thesis dies. The reason they shorted you in the first place was because it's operating at such a loss. The company should go under eventually. So guess what we need to do? If you want shorts to cover, you kill the short thesis. People go, well, look at GameStop. GameStop's at $30. AMC's at $3 because of the fundamentals. Because of how much is in each one's cash reserve. You're telling me right now if AMC was sitting at $30, would you not be feeling a lot different than you do now? Fundamentals completely matter. They completely matter. And guess what? If AMC's fundamentals were way better than they were, their price would be higher, and they, again, could raise capital at a higher cost and pay down debt faster. Told you guys, we need to fix the balance sheet. Everybody that didn't understand it, oh, you and Tony DeNaro are shills. No, me and Tony DeNaro understand that you need to fix the balance sheet and you're burning hundreds of millions of quarters. If you guys don't want to keep diluting, the way to fix it is to stop burning money. Go support the fucking movie theater. No, I don't want to support the theater. Adam Aron needs to just figure it out. Okay, you don't want him to be able to raise cash. You want him to just figure it out, and you don't want to go see a movie at the movie theater? You're invested in a movie theater company. You need fucking people to go see the movie so they can make money and pay down debt. It's not crazy. It's common fucking sense. Adam Aron didn't need to pay me to tell you that fundamentals matter. It's common sense. What happens if Larry Shane ends up buying Outlast? Whoever ends up with them. Hey, if a board member... I don't know if a board member can. Let me see. Let me think here for a second. Because I think if I... Because I can't remember who all qualifies for that exemption off the top of my head. I need to look at this. So the exemption would be, what was it? The exemption would be Rule 144A. Hold on. So Rule 144A, no, this is the... So this is what I wanted people to understand right here. People think that hedge funds and all these people can't buy. Rule 144A exemption allows hedge funds, QIBs to buy these. So this is how that these guys can go ahead and buy them. They just have 100 million in assets. These guys are allowed to because of exemption Rule 144A. They're allowed to do this. But I don't know if... Hold on, can I... Well, I guess he could, because he could do it through his LLC. I mean... Yeah, he could. That would be hilarious. But why? But the thing is why would a board member do it? If he's going to get no interest in the meantime, unless he's going to convert at a higher price. But it's like, well, I guess he could. He could. That would be funny. The 2026 movie lineup's going to be insane, you guys. The 2026 movie lineup is, again, it should reach about $11 billion. AMC, $11, $12 billion, depending on how the economy is. But AMC should definitely be profitable in 2026. These new movie theater screens, the reason why he wants them all up so fast is he wants them before 2026, so only people can experience that entire amazing lineup in 4D at these AMC theaters, along with the moving seats, the wind, the lights, the scent, all of that. So again, these are pretty sweet. This is going to be a pretty sweet experience there. All right, my boy's going crazy, though, you guys. I'm going to get going, though. Thank you guys for listening, but I just wanted to explain to everybody. these bonds, these conversion notes, because we've lived through them all. Especially if you've been, AMC, if you were one of those people that jumped in like MMT, all those guys, if any of those other stocks, any of those other meme stocks, you lived through convertible notes. You've lived through warrants, and you saw what they did. I just want people to be aware that it's all possible here. So thank you guys for listening. Have a good day. See you guys soon.